Let's take a look at that. We had some conflicting data filtered through here in South Africa. A report from Securities Africa saying the market was up 0.2%. Reuters data on screen reflecting a 0.4% rise. It's positivity that's filtered through nevertheless. Run us through some of the sentiment driving markets activity right now.
Hi Alicia, thank you for having me this morning. I'd say that the figure of 0.2% appreciation of the market yesterday from where we stand seems to be the correct figure. We saw some return of the bulls yesterday as against what happened on Monday. We saw a situation where the banks that were rescued by the CBN recently, investors had sentiments leading to investing in those banks. And that is not far-fetched in the sense that the CBN just recently announced that it has firm bids for 4 of those rescued banks. And what you saw was investors lining up to tap into the levels that you have at those banks trading right now, hoping that when they are acquired by a better institution, be them foreign banks or local banks, they'll be shareholders of the new institution.
We've had some traders describing where we're at the moment as a very funny place. How would you describe where we're at the markets right now?
Sorry, say that again.
We've had some traders we've been speaking to describing the market and where it's at the moment as a very funny place. How would you describe a market and where we're at the moment at this stage of the game, Samuel?
Well, the market, it would be right to describe the market as a funny place, but the thing that we see is that there is still lack of confidence in the Nigerian equity capital market right now. A lot of people have been burnt by what has happened in the year past, and some people had opined that by this time this year, that the market would have fully recovered. From where we stood at the beginning of the year, we didn't see it happening this year, and from what we see, we expected the market to continue to trade sideways, and that is what we've seen. There is still the lack of liquidity in the market because the two drivers of the market were the foreign investors and the banks. The foreign investors are no longer in the market, or are not in the market as they used to be. The banks also were burned by margin loans. CBN has restricted their lending to the capital market or to the equity capital market as 10% of their loan book. And I can promise you that from what we see from banks and what we expect going forward, no bank will max out that 10% provision because they've really been burned by investments in that sphere of the economy.
Having said all of that, if you look at how you're playing the markets right now, I mean, does the context dictate that one selects short-term stocks that are low-priced and has some ability to appreciate before bailing out? Or do you buy and hold on for the long term?
Well, it depends on the portfolio that you have. What we advise people to do right now is to balance their portfolio. There are a few stocks that are low-priced that still have value. Fundamentally, they're valuable, and we've seen their prices oscillate. It goes up, it comes down. You can get quick gains from those stocks. And there are a few stocks that have fundamental values that long-term, you know that from bonus issues, from dividend income, and from capital appreciation, that you're going to get decent returns from those companies. And those ones you hold for a long term. But what we expect to see is that if you have a long-term portfolio, if you're managing a retirement portfolio, we advise you to go long on the market. But if you have a prop book that you're trading on a short term, then you have to look out for the penny stocks that have the capacity to give you decent 15% return in a few days or weeks, and you can take your profit and watch how the market unfolds.
On a sector basis, the bank's certainly not looking bad, especially those that investors see participating in M&A activity. We looked at speculation around Skybank in this regard yesterday. Another player that speculation surrounds is Fidelity Bank. The rumor is that they're looking at buying AfriBank. What do you make of a potential tie-up on that front? Would it make sense for you?
Oh, sure, it will make sense for a Fidelity Bank. We've heard such rumors that Fidelity Bank is looking at very closely at AfriBank. And from where we stand, we see that a merger of these two banks or an acquisition of AfriBank by Fidelity Bank will augur well for Fidelity Bank. It would help them to achieve growth. It would help them to achieve a spread. From the last count, AfriBank had over 200 branches across Nigeria. Fidelity Bank, they had maybe about 160 or so branches across Nigeria. Now, when we bring that together, it will definitely help Fidelity Bank to compete favorably amongst its peers, at least the mid-tier banks. And so it's a step in the right direction for Fidelity Bank in the sense that AfriBank is one of the banks that have good assets, quality assets on their books, and it's just for them to make those assets more efficient, turn around the operations of the bank, and going forward, we expect that Fidelity Bank will be better off from acquiring an AfriBank if it does happen.
So do you chase Fidelity Bank then? Because looking at the kind of investor reaction that the stock has received over the past month, cumulatively, we've seen that share price falling back close enough to 8%.
Well, I expect that investors, this news about Fidelity Bank acquiring AfriBank has just filtered into the market, and we expect that investors will begin to play in that direction to see it as a way of getting, if they do acquire AfriBank, they'll probably end up being among the top 6-7 banks in the country in terms of maybe asset base. And so it will be a step in the right direction for investors to begin to look at Fidelity Bank right now, to see it as an opportunity to get in now whilst they are still Fidelity Bank. But you know, issues regarding mergers and acquisitions are still hush-hush, and we don't know what the full details are. As these details begin to unfold, I believe that investors will begin to play in that line. It's not only Fidelity Bank. There are rumors bordering on Access Bank acquiring one of the banks, FCMB acquiring one of the.
In fact, if we have to get
banks.
specific on Access Bank, it's Access Bank rumored to be sniffing around Union Bank right now. What kind of synergies do you see being extrapolated there?
That would be another giant leap for Access Bank. We hear that Access Bank is, as you put it, sniffing around Union Bank. Union Bank, from the last review that I saw, half year 2010, their assets were over ₦1 trillion. And if Access Bank was to acquire Union Bank, I know that Union Bank have very quality assets, and it's just making the bank more efficient. And they have a good customer base, and they have a good deposit base. Yes, they've had troubles in recent past, but Union Bank is one of the oldest and biggest banks in Nigeria. And if Access Bank is able to acquire Union Bank, with Access Bank has shown that they are able to run the bank efficiently. They've been able to run the bank profitably. And so the management of Access Bank coming over to Union Bank will spell good investor sentiments as far as the new entity that will come up will be concerned. And we think that's a step in the right direction also.
Well, while lots of speculation surrounds the banking sector, specifically the food and beverages sector seems to be proving to be the mainstay when it comes to investor choice because of its defensive characteristics. A stock pick within that space for you has been Dangote Flour. Run us through why exactly you're looking at this, especially in a context where we know we've got the possibility of rising wheat prices coming to the fore, and that impacting possibly on input costs for a company like Dangote Flour moving forward.
Well, what is happening globally, and especially in Russia, as far as wheat is concerned, is going to affect companies that are in that business all over the world, Nigeria notwithstanding. We expect that it will affect companies in Nigeria also. But we've seen Dangote Flour position themselves appropriately. We've seen the company do well in recent past, and we expect that going forward in the midterm. As far as the food and beverage subsector of the Nigerian Stock Exchange is concerned, it's a no-brainer to play in that subsector because, as we put it in here, that no matter what you do, people will have to eat. And so we expect that these companies will continue to do well. We expect the numbers coming out of this company to do well relative to the market. We expect that Dangote Flour, we expect that flour mills, companies like that will benefit from what is happening in the market right now. And we expect that with the turnaround of what we're expecting in the banks, with AMCOM coming over and banks being able to lend to the real sector, we expect that the food and beverage subsector will also benefit from that. And going forward, investors will get decent returns from some of the companies in that sphere.